Hi, my name is Fan Yang, your Chief Currency Analyst here at ForexMinute.com. You're watching today's Forex video briefing. It is Wednesday, November 12th, and we're in the morning part of the U.S. session. Today, the Bank of England released its quarterly inflation report. It lowered inflation and growth forecasts and was therefore a drag on the pound. However, in the pound yen, this reaction might set up for a good buying on the dip setup. Let's take a look at the 4-hour chart. Pound yen retreated from a new high on the year of 184.66 after the Bank of England inflation report, where we saw lower growth in inflation forecasts. This means the Bank of England is going to push back its rate hike schedule, but that's something we have come to expect after the previous couple of monetary policy statements. As the pair approaches 181.15, recent low here, we should start looking for buyers, especially if the RSI stalls at 40. If the bullish market is maintained, there is upside risk back towards the 184.66 high, with risk of even higher, perhaps towards 185 in the very short term. Now, a break below 180 would not only put in this price top, but also break below a rising speed line from mid-October's low of 168, and therefore that would signal a little bit of consolidation, bearish correction. Okay, so now let's look at the scenario where we just have a very short-term bearish reaction, and we can look for some buyers around 181.15. Let's say we find support here and then we get in at 181.20. Okay, now in that scenario, first of all, we need to put a stop below 180, possibly somewhere like 179.50, and the target, let's keep it conservative for now and look for 184.60 instead of for a breakout, even though the prevailing trend suggests the breakout is very possible. But let's plan for no breakout in case the markets start to consolidate further. So with the stop at 179.50 and the target of 184.60, the entry at 181.20 would give us a reward of 340 pips versus a risk of 170 pips, exactly a 2-to-1 ratio for the reward to risk. Now, if the market pushes lower towards 180 and then finds support from the rising speed line, we can consider averaging another entry so that the reward to risk ratio would be better. In this setup, in this trade plan, the absolute risk would be greater because of the increased position size. You're putting in 2 positions, so the risk is going to be greater than putting in just 1 position, of course. But again, you would improve your reward to risk, and the potential reward of going back to 184.60 also increases, and it's by a bigger factor than the increase in the risk. So that you can consider this sort of averaging an entry here. With the Bank of Japan recently adding more stimulus, I believe this is a prudent setup to consider buying the pound yen on a dip. And that wraps up today's Forex video briefing. Thanks again for watching. Trade safe, trade well.